All right. So I wanted to just introduce to you kind of the methodology here, and then we'll work through it. And I've got a couple examples that we can work through just to get us started. There's when we go through this, this is what we call a design thinking workshop, which means we're thinking in really in future state. And when we map the future state, we're able to backtrack that to the process changes we need to make as part of our trading plan. And as I lay this out, what I want you to see in the on the board itself, and let me just confirm you can't see the board, correct?
I can, yes.
Okay. What I want you to see is that I've created dimensions here. So preparation, execution, review, trade plan, you can read them. And all those really are is just ways to categorize the area that we're going to focus in. Usually in a workshop like this, we can get through two of them. And sometimes they iterate. You may come across this and it'll get you a little ways down the road, and then you may want to do it again. Or you may want to sort of polish off the one that we did solve for. Uh, but that's really kind of how it ends up going. And my goal for you is to give us a solid starting point so that you're getting some meat. That's what I really care about. So typically I plan for about 60 to 75 minutes. If it goes to 90 till we get to the meat, it's fine. Sometimes I've seen that happen where it's right down to the last 15 minutes when we're getting together where it just like all clicks together. It just happens that way sometimes. Um, the thing that you're seeing on the left here is the jobs to be done framework that I use to get to the future state idea here. You might think of these as use cases. Think of these like if we could, resulting in, they're use cases that you can solve for in your trading. So the action is if I started, stopped, created, modified, managed, mitigated, whatever, something, then in a behavioral action, I could start, better, create, improve, establish, or grow something. And then when I'm successful, or if my desired outcome would result in this clear and measurable outcome. So if done correctly, or when I'm successful, some finish line in the future will be crossed, and this is what will happen. So, for example, in execution, have you ever heard of MBOX? Do you know what MBOX is?
Yes, I've never used it, but I am familiar with I know it's a product, and indicator type product.
Yeah, it's an indicator on mostly delta. It's based on the Wyckoff wave theory idea, and another guy that was involved in that, whose name escapes. I know who he is, but he escapes. David Weiss. That's who it is. So, one trader said, if I could use MBOX to indicate my execution preferences, and now that's a summary, right? So there's a bunch of information packed inside of that summary, which we covered, and is not on this board, but this is a summary of that statement. The action being, if I used MBOX to indicate my execution preferences, in other words, I containerized it with that, and then I could monitor the 15-minute ranges and price action from a previous session and look for 2 to 3 setups with the same or better risk as the 2000 tick setup. So in other words, basically saying I am creating a context in a specific time and I'm looking for 2 to 3 setups. It allowed me to take 2 to 3 setups a day and have a better grasp of ideal conditions. At this trader's development, their level of development is they basically understood, they basically understood delta theory and wave theory and those kinds of ideas. They had a good grasp of it on the execution side, but what they were trying to solve for is how does time impact not only the number but also the quality of the settings or of the setups. So I imagine in my mind I should take 2 to 3, but how would I really know that, and how could I actually grasp that through data and experience without feeling like I'm guessing? So that's what we did. We containerized it through MBOX and then used the 15-minute ranges and price action structure to validate that in the 2K or 2000 tick bars, if you know what tick bars are. I assume you do.
Of course, yeah.
Since they execute on the 2000 tick bar, they're using the 15-minute range and price action to build that specific context. So it's very specific, and in this way you can't be making things up. This is another one that is just another example. It says if I put on a trade with an established swing being a pivot, with an initial risk of 10 points or a percentage of risk to reward for X number of trades, and that becoming the challenge of deciding what number of trades it needed to be, with a risk mitigation strategy. Again, more details packed into this. What does that mean? Well, it means that if it moves 40% on side, then you reduce risk. You don't maintain the entire risk the whole time based on in the money performance. Then he could know if he could Walmart trade. And a Walmart trade means I put it on and then I go to Walmart. And their goal was a clear measurable outcome of that strategy would be that achieving stress-free trading. So you can kind of see how it ebbs and flows from hyper specific and hyper precise to more general or colloquial ways of describing success and outcomes, but always precise enough that you can know if it's not happening. That make sense?
Yes.
Cool. So what I want to do with you is to get started. I thought the best thing that we could do is just have you describe how you're trading today, what you want to trade, the way you want to trade. You know, obviously you want to be profitable. Like you're in business to be in business. So that makes sense. You don't have to bother me with any of that, bother with trying to say any of that kind of stuff. But how are you approaching the market today? And what is it that you want to be able to achieve? And then I'll start asking you questions and seeing if we can dig in. And I hope for it to be as a painless process as possible.
Okay, let me pull up my, I can just use one trade type. Let's see.
And I'll take all the notes. Well, I guess I'll share the board after the fact, but yeah, I'll just be writing as you go.
Yeah, I mean, I don't think I can share out my screen with you now.
Yeah, you should be able to. Yeah, you should be able to. And then I'll just switch my screen. Let's see, how would I do that? Let's think. No, I could just do this. Here we go.
Actually, I'd rather just share out a screen capture if I could.
Yeah, it's fine with me. Oh, to like Discord?
It can be in here or Discord, doesn't matter.
Yeah, whatever works for you.
There we go. All right, so I'm just trying to find. I'm just going to dump it in Discord because it's just easy. I've never used this Google app that we're using. So.
Oh, really? Yeah, my company lives on it.
We, my consulting group, we used Teams for years and years and years.
Yeah.
Before it got its massive adoption.
I think the whole world's going to be being run through Slack or Teams or the cross collaboration tools that are existing now. I don't know how much you're following AI, but the automations that are going to be possible through those kinds of tools are ridiculous. Okay, this is one thing I don't like about Slack. I'm gonna have to download that so I can make it bigger. Not Slack, but
yeah,
Discord.
Yeah, I mean, it just wants to open in a browser when it goes full size.
There we go. Let me grab this.
I don't think there's anything financial in here on this one. No.
Okay, there we go. All right, so I am looking at it now. Let me share my screen. I'll just share my whole desktop. There we go. All right. Yeah, walk me through it.
All right. So I see you're in, or you joined, or you were invited to Cloud9, PFY, whatever it's called these days.
Yeah, I OnlyTix is a guy I know and I interviewed 2 years ago. So he asked me to interview. He asked me to be part of that group and provide some interviews over there. So I'm
cool.
Providing some value.
Well, the reason I mention that is you'll recognize it. Well, I don't know how much you've been involved or not so far going through that content, but you'll recognize this first one. is AMT based. So some of the ideas that we all discussed in there will flavor this one a bit.
Got it.
Um, so there's this idea of multi-day merge of balance area or value, and then when price is coming in or leaving one of those, there's an idea of a strike zone. They don't use what I use, but I use a average daily range, about 10% of an average daily range for the because a level is great and all, but we all like to think that we're exact to the tick, but you need a range to operate in.
Yep.
So area of interest is about 10% of a normal day, around there, and need 4-hour potential in the trade. It's a fairly low win rate type trading, say somewhere between 35 to 45% win rate. So I don't think that most people grasp that in there, that you're going to take lots of hits.
Yeah.
But
yeah.
That's just the nature of it,
Yeah, exactly.
So I just don't want to see something obvious in the way. Next balance areas aren't a factor. Balance area high lows of outer balance areas are a major factor. And then order flow requirements listed out here, needs 3 out of the 4. I'm not going to go into each one of these unless you really want to dig into this.
I can read it and ask questions, or you can point out the stuff that you think is highly relevant.
What's highly relevant is not so much the plan as opposed to taking marginal trades or things that don't really work into the plan.
So I see.
So I mean, this is good and all, but there's a lot of things that are what happens on slow days, let's say, or it doesn't have to be a slow day. It could be a busy day, but taking marginal trades, it's things like that I would say generate more of the problem than trades that are according to plan.
Okay, so if I were to restate that to you, what I'm hearing you say is that given this entry criteria, that this is specific enough and prescriptive enough that when the conditions are right, this is not hard to follow, and you feel completely comfortable in your trading, following it and getting the returns of its probability of being correct.
I do. Where some. So if there were a flaw in this first piece, it is knowing a cutoff point for when you're wrong on attempting around an area of interest or a zone or a strike zone or whatever we want to call this. So let's say price makes a nice move into your zone. You think it's going to reverse. How many times do you try and execute in that area? Mm-hmm. And I have that laid out as really 3 times, but there's no great reason for that. Unfortunately, it's when price isn't making an immediate reaction or something close to a reaction, you have to essentially give up the area at some point. And to put a number on it is tough, and to collect stats that actually prove you right or wrong is really hard.
Yeah, because what you're dealing with is too many variables that require too broad of a range of what ends up being ambiguity. That's the issue. What does it mean to be not reacting? What does it mean to I took one attempt and I stopped it out? Is it because the fixed risk was stopped, or was it because it wasn't moving fast enough? Low RVOL. There's too many variables in that to try and build a model off of based on how we've arrived at the execution. This is a good example, in my opinion, of a great execution strategy, provided that you do it exactly as it says and you don't question it, and you never, as long as you set it and forget it, it's fine. But if you try and tune it at all, it's going to break instantly. And the main reason is because none of what you see here is actually based on any price structure at all. It's just it's an area with delta and an entry style. That's it. So it's not that there's anything wrong with. I'm not criticizing it. I'm not criticizing it. I know what this is. I know how well it works. I've seen it. This is how I got into trading. It's actually this. So the issue that you're describing, the exact issues that I went through as well. So how this becomes valuable is not for me to give you answers and say, well, you're doing it wrong. I'm not saying that. That's not what I'm trying to say. What I'm trying to point out is what we need to figure out, and the answers are in your mind, not mine. But what we need to figure out is what in this is not prescriptive enough for you to answer that question of, well, how many is it 3 tries arbitrary and that's okay because that works for my personality? Or is it 3 tries because on the whole, based on study, these value area highs and lows give up after 3 tries? What criteria am I fixing that information on? And that's one possible area that we could dig into. The other one was what you said is what happens on slow days.
Well, yeah, there's this idea of create a trade that doesn't exist.
Yeah.
So that's what can happen on slow days. Yeah, I've looked at trying to define this max 3 attempts, and it is elusive because of the way that well, there's so many ways that price can occur over an area. It could be a very tight range where it goes nowhere. It could be very scattered over it, and so trying to quantify something like that just becomes it is something that I have yet to be able to do, basically.
So do you want
if
to
you like structure, if you like structural type, then the next one is purely price structure based. So
okay, let's look at that. What I'm trying to figure out is what's holding you back. And I'm a believer in, as I told you before, you're a machine. The inputs that are given to your machine are going to create outputs. So what we need to figure out is how to get you in alignment and with equilibrium on the inputs that are going to create the outputs that you're looking for. I think this is one of the main reasons why we struggle as traders is that we're looking at inputs that seem reasonable, like they should create the outcome, but we didn't factor that you're the one that needs to make the choice. So let's look at this structural one and talk through it. Let me just scan this real quick, so I don't want you to feel like you got to read it to me. Okay. Okay. So a delta reversal, basically.
No, this doesn't have to have delta. So this is a structural trade that I enter in. I will step in front of the bus and just enter, and then I will usually reserve a piece for order flow if it has it. So that's why it says OF add.
What requires obvious high-low net delta on prior high and low structure?
So at the same time that price structure is being made, I also want to see a specific type of delta being put in those in the structure itself.
Okay, so you're anticipating a delta, a divergence, or you're seeing one?
No, I don't care about so just skip the OF add and the OF requirement because that is a very small piece of this. It's an add-on to the let's say core position.
Mm-hmm.
It happens both almost identically in the same place a lot of times. But in any case, so just let's skip the order flow piece because it just doesn't have much of a bearing on this.
Okay.
So I don't know if you know what a QM is, but it's been around for years. It actually stands for Quasimodo. It's basically a wonky looking Head and Shoulders. That works quite a bit better than that. And let's say the left shoulder and the head, I need to see a very specific type of order flow, or it's not order flow, it's delta take place in that. Like that. I need to see, yeah, exactly. I need to see extremes in that left shoulder and that head in the way of delta, which just typically means that people were trying and didn't get exactly what they wanted.
Okay.
On their outcome.
And relative to the timing of this particular trade, what tells you it's time to take the trade?
The location of price coming back up to this. So you see that right shoulder that you drew.
So here.
So yeah.
Okay.
So I'll step in front of that,
All right.
basically at the a little bit higher than what you drew, that apex on the right.
Okay. So between here and okay. So this is key. This
Now
is.
so the highest point you have
I'm
on the
gonna do
right.
this again. I'm gonna do this again. Ah, doggone it. Goofy kid. There we go. Okay. So somewhere between here and here you want to sell. Is that correct?
Now I'll actually start selling at that top line, and the trade is valid all the way up to that top line at the very apex of this. So anywhere above that left shoulder, in the mid, I'll start selling in the mid of that left shoulder, which yours doesn't go up there, but that's okay. So you've had a structure break.
Mm-hmm.
That's the price action piece where it breaks structure to the downside.
Right there.
There you go. So you've had a structure break. Then I will start selling in the middle of that left shoulder all the way up to the head potentially.
Oh, I see. Let me get rid of this. You're saying from all the way up to here is valid for you.
That's right.
Yeah, I got it. Okay, I can.
I
Yeah.
usually put a piece on in the middle of that left shoulder just to get something on, and then I'll scale in a bit more. And then if there's order flow between the initial entry and the top, and I'm not fully positioned, that's where the OF add comes on. So, I know this. It's a little, making it out from this, what I captured is a little bit difficult.
No, I completely understand what you're doing. It makes sense to me now. So I also see the level of ambiguity involved in this trade. So a couple of other questions. What your target is 2R for 90% of the position. So you don't know your R until your full position is on, or you've been stopped out. Would that be correct?
I will approximate it from that mid to the high of that left shoulder. So I'll already have an approximation of what it needs to do. Anything that I get, if it has a late turn, let's call it gravy, but it's it's. I want to make sure there's 2R from that initial entry at least.
Okay, so you're anticipating to get the average of your position on here.
Right.
And then let's just, for grins, let's say that range is 5 points, just so you're already anticipating. You said 3R, so you want 15 points of range down here as a target. Is that target a fixed target, or is it just a pure R target and then you're out?
So 2R is target 1. The 3R comes from, I don't want to see the merge BAs because they have, that would go against my idea of strike zones being kind of floating around these BAs. And so it's really a 2R target, not a 3R target, but it starts getting messy. It could be about 1R before it, let's say.
Because if you had a BA right, value area high right here, and that's only like say 1.5R away, that's going to be a problem for you, right?
That's going to be a disqualifier.
So is this a no trade? Like in this scenario, this would be a no trade, or is that we're going to risk it and hope that we break through?
Depends on how slow the day is.
Okay. I can see.
That I mean, essentially, that's a no trade. That's a no trade.
It's a no trade.
You can do things like, you can play with it and move your stop aggressively so you break even quickly and things like that. But that's a whole different. You've just twisted the trade completely. So.
Yep. I 100%. Okay, so what you have written out here is really, both of them are sort of obvious and prescriptive. There are a few ambiguities in them, but before I sort of impose my view on that, because it's not really relevant what I think, how well do you do with either of these trades? Do you have problems with them, or where are you struggling with each of these trades specifically?
Not much when it's executed correctly.
Mm-hmm.
This is probably 1.8R at 60% win rate type trade.
Mm-hmm.
So 2R target, yes, but if you look down, I will manage it a bit, and if things start to to get in the way, or the market's dynamic at all times. So as my R evolves, I'll tighten up stops, whatever the case may be. So to say you're going to have a perfect 2R, win on it's not realistic.
Right.
So it averages out about 1.8 R on a 60% win rate. The other one is 38% win rate at about 4R, oddly enough, 3.8
Mm-hmm.
R something. So both of them are profitable when taken correctly. So if I go back and look at my logging of this, it's the garbage trades that are the problem, not the trades that are taking according to what's been laid out.
Okay. Well, then to me, it makes no sense to dig into the ambiguity that I perceive in these trades. Let's focus on what's getting you to act outside of your plan. I mean, to me, that seems like the most obvious thing that we could be helpful with in the short term. So with that in mind, let's talk about what is going on. Help me understand the situation where you sense that you are in, you think you're going to take, or now you've taken multiple garbage trades. Let's paint that picture for me.
I can't say that it is consistent. Is the problem? I mean, it'll happen on. I'll take things that I aren't according to plan on a slow day, on a good day. I'm fairly sure I've seen what I'm going to be executing on many times. It's not something I have diagrammed out, let's say.
Mm-hmm.
So there is no stats on it, and it's
well, it doesn't have to be. I mean, to me, it seems like it's in the intuitive part of your experience. So I wouldn't expect you to have stats that says, "Hey, man, on a Tuesday when it's a full moon, that I just am a button masher, and I don't know why." Like it doesn't need to be that. It's just whatever you think.
Yeah, no,
I want to get inside your
I'm
head.
Just trying to, I'm trying to figure out how to communicate that. It's as I think in one of my intros emails, or the one from your form on your page, is like I've seen so many things happen that I just expect things to work because I've seen it happen so many times, but without any real definition around it. What is work? Where should it have been taken off? Maybe it did work.
Yeah.
but without having a true target on it, and it only went, say, I don't know, 12 ticks, then maybe that was it. Maybe that's all that trade does. But it's so
when you're taking trade, I'm going to keep interacting with you because I just want to play patty cake with you. When you take the garbage trades, are they these trades that you just described to me here, but there's something missing in the criteria that should be there?
It can be that.
Okay.
It can be that. It could be seeing incredibly obvious structure in either in price action or in just standalone order flow, and I'm like, yeah, I've seen this happen, I don't know, 300 or 400 times. So let's put some risk on this. And sure enough, I'm usually not incredibly wrong immediately, but then it's, where's your target? Yep. And I mean, you can see that I manage risk. I think I have my risk in here. Yeah, so 0.3% of risk. I'm not killing an account or 0.2% of risk on any one trade, and that's never violated really.
That's good.
So I'm not killing an account. I'm just completely screwing up an equity curve though with this garbage.
Yeah. I think this is common for people who've learned how to trade effectively. Which is an interesting phenomenon to have. I'm in this spot where I can actually trade effectively, but I'm so good at reading price action. I'm so good at my skill. I worked with a guy who used to be a market maker, and I'm telling you, man, this guy could pick tops and bottoms like I've never seen in my life, to the tick. Amazing trader, but garbage setups all the time, all the time. So what you're telling me and what I want to dig into.
So I'm not the only one.
You know, well, not only you're not the only one. I'm suspecting that the problem that of people that take garbage trades is a rather finite set of variables that are involved. So what I want to ask you is when you're taking because you set out a couple of things. You said it could be a qualified trade, meaning I am trading the structural QM, but I'm missing really obvious stuff. Like maybe the structure break wasn't there, or there's an obvious order flow thing that on any other day I would have seen it, but today I didn't. Okay. So what I want to dig into is when you're in those situations where you're taking what amounts to an unplanned trade, what are you looking at to make that decision? That's open-ended on purpose.
Yeah, it could be, like as I said, it could be something in price structure. It could be something in delta. It could be something in footprint. I don't really get biased by other people's comments. I think long ago it could have been somebody made a comment that biased me, so I started looking for a trade in that direction or something like that. That doesn't really, if anything, I typically trade against people's comments, and that's kind of a problem too, because that's just a coin toss and not I'd call it statistically based or probability based,
Yeah.
unless it's just an obvious fade guy.
Yeah, right. Totally.
And I'm not around any of those people anymore, but they do exist. But so if it were one thing, and I think maybe 2 years ago or so, I was taking, basically it was just order flow based. Order flow was a little new to me maybe about 3 years ago. Mm-hmm. I started looking at order flow because I actually have a breakout methodology that I really like to trade, and it is profitable, but it really needs a little higher win rate. So I thought, everybody's raving about this order flow. Let's take a look at this and see if we can kind of qualify either trades before they happen or after they happen and cut them short if that. Anyway, so once I started diving into order flow some time ago, I would see things that I thought, yeah, this is exactly what people are talking about, and take it, and it was just that. But now it's just a scattering of things. There is no one, I don't want to say indicator.
I'm already assembling it in my mind. You're reading my mind about what I think the dilemma you're facing, at least the macro dilemma, is.
It's, I don't know. So I would say a little bit of the problem is I like to push buttons. I like to be in trades.
Yeah, you like to have control.
I have a background of, kind of being paid to take trades, and that's not the case now. And I thought I had that mostly under control of, it is more being paid to wait now as opposed to trade.
Yep. So let's ask this question. If you were on these days, you've already said the answer, but I'm going to reframe the question to see if I can get, okay, so I can reframe it, see if you'll hear it come out of your mouth. All right. When you take these unplanned trades, what is the number one priority in that trade? Like that makes you go, I'm ready, and now I'm clicking.
Ooh, the number one priority. Mm-hmm. Oddly, I don't know. I mean, I guess it's to be in a trade, which is
so. Let me ask you.
Not a valid reason for being.
Well, hold on. Before you criticize yourself, before you do that, because if my theory of the world is true, that process is the explanation for everything, then your number one criteria is being in a trade, and that's what you did, and then you executed it. Sounds like your process is functioning perfectly. Right? I mean, think about that logic.
Being in a trade over being net, or at least, I am net profitable, but not anywhere close to where I want to be. So just being in a trade versus being net profitable, let's call it that, that's just crazy.
Okay, so now you're making up. Now think about this. Let's pull this apart. You're making a value judgment, and you're saying, well, yeah, I agree with executive power, the supreme executive power. If you're familiar with Monty Python, yes, you can make a trade, and it is costing you equity at this point. You're profitable, but it's costing you equity. So the question is there problems with your decision making, or is there problems with your prioritization?
I would say both.
Okay, so one leads to the other. Wouldn't you say, though?
Yeah. To me, the all of a sudden, I realize I'm in a trade that wasn't fully qualified, and so that's poor decision making, and the priority to just be in a trade, I guess.
Yep. So your process is now. Let's dig. So I think we found a cool hole in your assembly, but I think there's something before this. I'm pretty sure there is. Let's dig before that. What is going on? Process. Okay, can I take a quick moment and make a comment? I don't usually I don't like to give answers because I think the answers, you have them, and the earned truth is earned truth is learned truth. Processes are fractal, just like the market is. So your process of having a priority of being in a trade, and then the execution of taking it, and then trying to muster the management skills to keep that profitable, I think are nested in a larger process. So now what I want to go do is attack the larger process that is containing this one. What is going on for you? What time of day is it? Are you exercising? Do you have a rigorous preparation schedule? Or do you talk to people? Is the phone buzzing, dinging? I'm just trying to figure out what process are you executing that's above this one that makes this one possible. Here's an example of one that would make this one impossible. If the computer was off, you could not execute this process. You see? So what's going on that makes it possible?
Well, I have a huge amount of platforms up, and everything in the world I can trade. So that's making it easily possible to transact.
So you have just 6 monitors and a bunch of markets up all at the same time?
Yeah, something like that. Yep.
12 months. It's okay, man, dude. There's nothing wrong with the NASA's control center. I mean, it's awesome. I think it's awesome, actually. I have in my own dilemma. I started with 2, I went to 4, I got to 6, I got back down to 2. Now I'm back to 4, but my trading is actually on one screen. All of my trading is on one screen, but I only trade one market too. So I'm not the kind of person, just so you know, that there's all kinds of walks and there's all kinds of ways. I'm not the kind of person, even as much as I wanted to, and this is the way I started, trading crude, gold, and ES. I can't trade multiple markets. I'm not capable. So just as an example.
So I trade multiple with the thought process is, well, what I've been trying to implement is having multiple markets so that I'm not taking substandard trades.
Yeah, but yet you still are. Interesting, huh?
Yeah.
So let's think about that. So now we've got a little clue into I'm just give it a name, the macro process that's going on. So you're looking at multiple markets. The intent is to not take substandard trades. So let's talk about just that sequence. You've come, you sit down. Just walk me through the whole preparation all the way up until the button click. Just walk me through everything that's going on. Feel free to include spatial details. I mean, I'm just trying to get behind your eyes.
Well, I mean, so this is what I sit at every day. I just sent you a Discord there. It day typically starts, around 8:30 or so for market related things.
Central or market time?
No, market time or Eastern for me.
Yep.
So, um, and I've usually looked at several things already on the iPad just to get an idea of if we're going to be in range or out of range, and if there was anything interesting that happened overnight. Unfortunately, I have an odd habit of waking up at about 3:30 to do the same thing too.
Wow. AM, right?
Yeah, unfortunately.
Yeah. Wow.
Yeah. But but I typically, luckily, I no longer execute in the middle of the night. So, um, and then I'll just the night before I have some type of plan put together for the next day. I'm fairly loose on plans because you need to kind of see where you're going to open for the next day. Because plans get blown apart by what's occurred in the morning a lot of times. Readjust the plan somewhere between 8:30 and 9, and then I'm at my desk by usually 9:15 with everything ready to go. I would say, in thinking about it, what is the ideal situation for unplanned trades to happen is a very slow day or a day that I've missed trades in the morning. And I would say that the bulk of trades usually do happen by noon. The rest of the day is either management or, if we have FOMC or something, I avoid that and then trade after.
This is brilliant.
But the afternoon can become a somewhat of a hydra. I'd say if it's slow in the morning or I've missed trades in the morning, then I wouldn't call them revenge trades. It's more about trading to, I don't know if I'd call it feeling like I did something that day, because but it's just no great answer for. I mean, I don't know how to complete that, but I'm still formulating that thought.
Yeah. No, this makes sense.
Now, this is a little perplexing because I will also do this. That one's, I would say, not self-explanatory, but kind of easy to describe. Taking more trades on a day that's already been a good day. I'm not sure on that one, and that one doesn't happen as often. Typically, if I am if I've had a decent read on it, then I will sometimes over execute. Not in size, just in number of trades.
Frequency. Yeah. Okay, so you've said a couple of very fascinating things that I want to dig into. The very first one was plan. You put a plan together, but it's loose because you need to see where it's going to open. You said a lot, without saying very much. So I want to hear what is a typical plan for you? What's included in that?
More of a orientation of what the next day may hold. I look at what could potentially unfold. I don't plan exactly what I'm going to do because I don't know if I know that some people do this. I don't know how I would go about doing it because the permutations are kind of endless.
Yep.
And I'm not sure I'd have much to do if I planned it the night before. And then it just so I make 4 different scenarios and it doesn't meet any of them. Well, that could happen 20 out of 20 days in the month. For
Yeah.
me,
And how
so,
have you proven? Yeah. And then in what way have you established that you're actually meaningfully preventing yourself from taking risk? No. Yeah. I agree with you. Planning needs to, because I know what the plan produces, not because somebody told me I needed to have a plan.
so yeah, so like I'll look at everything that has occurred during the day, review trades that I took somewhat. Usually I save that more for a weekend, and but I'll look at the levels that we may be going through the next day, structure that might be breaking, just to get an idea. So I know what is kind of possible, what's realistically may happen, and then and if I don't think that levels are valid anymore, or the structure just doesn't matter, kind of note that, not physically, not write it down, nothing like that. Just take a look at it so that I'm familiar with it for the next day. And then in the morning, kind of redo the same thing. Just take a look at everything, say, all right, here's where we are. We're opening in range, out of range, big gap, whatever. And then get an idea of what may occur.
Okay. So, with, the auction market theory, there's a couple of things that can, sequences. So I understand that, and I don't necessarily think there's a problem with that. We just need to. I still got some stuff I want to pin down. But
Yeah, sure.
let's say, for example, that you've got a composite 3-day. Let's just say it's a 3-day composite here, and you've got value area high, value area low, and the market's opening up here. And we're opened up here. I also want to say this. Let's say we've also got a high of day up here. It's a hash, but I guess I should have just left it like that. So whatever. That's the high. So price opens here, and it's 8:30. We're waiting for the 9:15 open. Can you see we've got a Quasimodo? What'd you call it? A QM?
Yeah.
Yeah, you got a QM up here, and then what was the first one called?
That was that's just basically an AMT
We'll
type
just call
trade.
it an
So
AMT.
I call it ASO, just AMT supported by order flow. So ASO.
Okay, so I'm just trying to recreate a context so that I can dig in and not ask you the same question again. But okay. So if it's 9:15 and we're looking at the market, and let's just say this is you said you traded NQ and QCL. I'm not sure. We'll come. Don't worry about that. But let's focus on this. Price opens here, and
Yep.
is your now we haven't talked about bias or how you formulate bias, which is not important. Is really not important. We want to focus on process. But if price is going to open here, is it in your mind that if price comes up here, I am automatically thinking the Quasimodo is a legit trade if it sets up like this? And if so, how does that affect the idea of this trade? And then vice versa, if it goes down first to come down here, are you thinking it's going to go up there and then give you the Quasimodo trade too? And obviously you can understand what I'm trying to get at from a planning standpoint. How do you know that it doesn't just blast through here? What invalidates that? What invalidates that? That's basic. I set this up to ask basically that question as a part of in the preparation phase, not at the trade phase, in the preparation phase.
So in looking at the first one you laid out, which is kind of in the middle now, if that QM set up over yesterday's high, I would want to make sure that I had plenty of room, say that 3R back down to that balance area high that you have marked. Let's call that scenario one. Scenario two, let's just take the one that's to the furthest left. How would I know if it's going to just blast through it or not?
Yep.
Really, that is just it's a 60% trade. So
okay, you just accept that.
It has to have the qualifying. It has to have the qualifying net delta in the left side structure, or the left and ahead. And if this is happening in a overall, let's say, midterm trend, so like a daily, I'd say we're almost in a daily uptrend right now, almost. I'm going to take a harder look at this and really make sure that I really want to be shorting against this, because we are looking for a significant intraday move. I mean, almost the whole, this is about half the day you really have to capture. And so when you're trying to capture half the day's range in a trade, it's not great to be trading against trend,
Yep.
the underlying trend, let's say. And I don't really define that because it I know of where we are, how we're moving. I know of if it's a high volume day, more likely a trend day. If it's a low volume day, most likely a range day. And so I take that into account as the day is unfolding. I don't really look at it the day before or in the plan because there isn't much to plan for. It has to actually start unfolding. So,
Well, there
as
isn't,
for,
there is, and there isn't. I mean, I want to point out that you have already, I want to say this gently, but you in some ways contradicted what you said. Yeah, I said I don't need a plan because I need to see it unfolding, but I also I'm being selective based on what I think the trend is. So which is it? Am I going according to the plan of the larger time frame bias, or I have to wait for it to unfold? I'm
uh,
saying this with
that,
complete compassion because I am familiar with, especially this trading style, that you get to a point where you're like, if I cannot figure out a bias or I cannot figure out a way that allows me to see that by the time price gets down to here, I'm perfectly content to wait for it to come down here. But by the time it comes down here, that it's got enough gas to do something else that it's going to reject, or how do you decide whether or not it's going to go through? So I'm completely familiar with the dilemma that you're facing. I just want to be clear that you've got some contradictory pages in your book.
uh, I guess at the same time, I would probably still just talking about that leftmost one. Let's call it scenario two. I don't think I would change. I don't think I change much about what I do and skip the trade if it sets up. I may manage it tighter, and that would be about it, really.
Okay.
I mean, the more that I think about it,
So then,
if I see everything ideal, I'll take the trade. I may be a little more aggressive on the management of it,
okay.
and
Basically, because remember, we're talking about preparation. So I was just trying to dig into your mental preparation. Are you anticipating? I hope it doesn't go up there because if it does, it's probably going to stop me out, and I really would prefer that. I'm just trying to get behind your eyes on that. So I think I understand how you're doing that now.
yeah, I mean, I've seen it happen enough that I just don't know. Here's the thing: is everybody talks about having this daily bias the next day. I know OT's big on always having a bias and all this. And a lot of people are. I Biases and expectations are unfortunately just a frustrating way to trade, I think.
Yep.
So I just look at it as I'm just gonna have to see a lot of this happen and go from there. I
I,
don't
I
and I don't know if that's right or wrong. I'm not saying it's because these other guys, a few of them trade fairly well, but
Well, I haven't found a problem with it yet. I mean, everything I'm hearing is coherent. And I don't see any issues unless there's if you're saying I don't take them and I do, or that I should be taking them and I'm not. But I'm still focused on the fact of how we're getting to the lower quality trades. So now that I feel like I understand your prep, and it makes sense, I don't see any major obvious holes. I want to talk about the missed move thing. So how is it that you miss moves? What's again? We're still focused on that macro process. How is it that
sure.
that happens for you? What's going on?
I've got aging parents that I manage quite a bit of stuff for. I've got a dog that has needs during the day. I can just step away for my own needs for a bit. I can take a call that I shouldn't have taken during the day. There's a
Mm-hmm.
hundred ways to miss trades.
Yep.
There's there is something that I may or may not even consider a missed move when I'm just I may hesitate, and that because I just need a little bit more, and then I'll consider it a missed move, whether it was or not. I mean, that can be lumped into that a little bit. I would
Mm-hmm.
I would say the other ones are more extraneous, and dialing in the process might fix the other one a bit more, but there's plenty of extraneous distractions.
Okay.
that
Um,
that are just life.
do you find something? Okay, here's what I want to know in terms of your consciousness of it. Do you find that you miss moves when you do something irregular? Like ordinarily I'd sit here for 45 minutes, but suddenly somebody calls and I decide to pick it up, or suddenly I decide, well, I'm going to go get, I'm going to go make myself breakfast because it looks like nothing's happening. And I wouldn't normally do that, but I'm going to do that now. Do you see any consistency or pattern? And it doesn't have to be the same thing, but just that consistency is every time you try and do something a little different, that's usually when the move gets missed.
Um, hmm. I, Not that I'm aware of, but that there is a very likely possibility.
Okay. And when you miss the move, what is the instantaneous reaction? Is it to find a way to get in, or is it to be more aggressive on whatever the next opportunity?
I don't really, well, I was going to say, I don't really chase a move at the same time, taking things that didn't exist still in that same direction. I guess that would be chasing a move. So
Mhm.
that's not a great that's not a great response. Um, I don't. Well, to me, being more aggressive is using more size, and I don't size up on particular trades. It's a it, I don't, my risk management is I would say that the kind of core of why I still do this or am able to still do this after 20 some years and never kind of killed an account or multiple like most people. So I I I don't ever do anything that would ever put me in risk like that. So I don't become more aggressive for my uh like that. Now more aggressive to trade it in the direction that I missed it in, maybe.
Yeah.
More aggressive about getting into a trade, yeah, definitely.
Let me pull something up. I think I want to show you something. So I was hoping, well, it doesn't matter what I was hoping, but I want to show you something that I think, one more question on this, and I think I have a very clear picture now and a way to dial us in. So are you familiar with the concept of front side and back side trading?
I am in the small cap land that I pursued for and did reasonably well in, from oh 2018, 2019 timeframe.
Okay, so the let me share my definition just to make sure you could very easily be much brighter than I am, and that's not a problem. Totally okay with that. Front side being the trade has shown no confirmation of activity. I'm not in the body of the move. I'm in the wick high, so to speak, of the move. Backside would be I'm complete. I've already seen the wick and I'm completely in the body of the move and expect it to go to a certain location. So it's basically price risk versus mm, information risk. Does that make sense?
Uh, I suppose I am not familiar with this for that term being used this way.
Okay. So yeah, that's fine. So one of the things what I was thinking about is in your especially your Quasimodo trade is that you are waiting for a high to go in, right? And then any retracement up. So this would be an example here. Assuming this is a level that matters. Any kind of move up what after this break happens. Is that correct? So the break
Yeah,
happens
so
here.
that's a break structure, sure.
Yep. So anywhere between here and there, you're looking for a sell.
No,
Between here and there.
no. From the mid of whatever was created on the left,
Uh
that was broken. That was broken. No, no. So you can leave those marks up. So basically 18 and a half up to 20 and a half or so.
oh,
Longer.
okay. So you're only trading from at the structure break to here.
You got it.
Okay, I see. I see.
Yeah.
Um and
So in
so
this case, in this case, it worked out nicely if the risk made sense. You know,
so the question becomes, is there any configuration in here that causes you to execute, or is it basically intuitive?
So this is where the core goes on as close to the mid as I can get it.
Mm-hmm.
So let's call that 19 or so as you
Mm-hmm.
have it marked. And then if I see something that's above it or not going to screw up my risk much, and this has ideal order flow, let's say that black bar that just tops out at 19 has incredible order flow in it, then I may, now unfortunately not that one, the lower high that I was looking at, the
Here.
lower, yeah,
Yeah.
let's say, you know I may execute all the way down to there because that's still a valid area. I wouldn't execute much lower than that, but let's say there was just incredible order flow, and so um, then I may add a piece on there, and that'd be it.
Okay. So then the question is in let's talk about the garbage trades. What about this configuration is missing, um, or is your focus been removed on the specific structure?
So a garbage trade, let's say it only poked down to 4016 and didn't do any volume there. So it was a quick, I think in Wyckoff terms, they used to call it a spring,
Mm-hmm.
and that still meets the criteria, but it didn't really break structure. There was not enough volume, and that's a pretty tough thing to quantify. But this is a nice structure break. I mean, this is just easy. Just look at it and go, yep, no doubt, it broke structure. If it did something like what you have drawn, did it really break structure? And so that becomes a marginal trade.
Okay. So then now I think we've discovered at least something that we can dig into. Would you say that that's the only trigger where you're on the fence, or are there other things that cause you to be on the fence on whether or not it's a legitimate trade?
In this one, no, I think that would be. There's not much. This is fairly templated. It's the the delta in the left side can be a little bit difficult, um, and I've seen that a few times. So I want to see easy, obvious delta in that, say, 140 area or 150 area,
Mm-hmm.
time wise now, and also in the head. If I, and what is that? Well, I'm looking at a cumulative delta chart, and it's very small. But if I can see it at a glance, that's what makes that up.
Yep.
I mean, and to try and quantify that, again, it's one of those things that you're just kind of chasing ghosts. It either is or it's defining art type thing.
Yep. Okay, so here's a couple of things that immediately the first my diagnosis is that you're looking at too much information that's too ambiguous. So either we got to like take away information or we got to take away the ambiguity, one or the other, but one or the other has to go. So do you need delta to trade or do you want delta to trade?
It's part of the criteria.
Well, I
So
recognize that, but to your point, do you think that you could do it without it?
uh, I disqualify quite a few that fail. So I would say that my win rate would be a problem without it.
Okay. So and part of this is that again, I just want to remind you that we're trying to focus on the stuff
Like,
that is garbage rather than your win rate's fine. I think your equity curve is fine with based on what you've said, with the things that you're doing right. So we got to turn our attention to the things that we're doing wrong. And to me, that's the garbage trades needing more clarity. And so I'm just trying to build a case here and just have you think about or make it part of your consideration. So let's present a scenario. We don't have delta on this chart, but
so I'm gonna post something that I sent somebody today.
oh, perfect. Yeah, that would be good.
So here's a crude trade
Uh,
that I
there we go.
marked up for
Oh, you
somebody that
showed me
just.
that. There. Oh, those are nice, man. Do you like those? Are those worth it? I've wondered if
They
the
are. So I've had, yeah, I basically bought them I don't know, second week they came out, and they are. It's one of the few things that I sit down at every day and am just astounded by the clarity
wow.
and the space and just. they're just so good.
Yeah.
And now they're so cheap. You know, I didn't, whatever they were, let's say they were, I don't know, $1,300 each at the time for the big ones. The ones on the left are reasonably inexpensive, but now I think they're like $800. It's like, how do you not? This
Well,
is my
I've wondered if it was
this
a
is my
gimmick. I
hammer.
mean,
You
you know
know,
what I mean?
if I was a carpenter, I would find the best damn hammer and saw that I could find. And so, you know, I mean,
That makes perfect sense. I mean, I'm glad to hear you say that because to be perfectly honest with you, I didn't think it was a gimmick. I mean, I thought it would be cool, but I'm always unsure about like how do you quantify what you're really going to get? So I'm appreciative to know that they help you.
the clarity they use that. Uh, I don't watch much TV, but it, they are the ones that kind of came out with the 4 color range pixels, the what they call the quantum LED. But
Mm-hmm.
the clarity in these screens, which uses that, is just it's just unbelievable compared to some stuff. So,
All right.
all
So
right,
walk me through
so
this. What do you want to look at
here we
first?
go. So, we'll just pull up the bottom section as you had it up. Okay, I'm pointing out where I see obvious delta. See those two?
Mm-hmm.
See where it didn't really happen for me in that circle or
Mm-hmm.
that ellipse or whatever the hell that thing is.
Yep.
And so this was a comment to the person I sent it to. I said, okay, I skipped this because there wasn't this obvious delta. Uh, let's call it blow-offs. They're not really blow-offs, I know, but anyway. So if you now pull down the price action, you'll see it just didn't happen where I needed to happen at both those apexes.
I see. And let
And of course,
me draw some lines up. But now here's the question.
and this was a 4 hour trade.
A 4-hour trade?
No, 4 hour trade.
Oh,
I mean,
4-hour
it
trade. Yeah.
easily got 4 hours, no problem. But
Yeah. And that's
so
been
not a great example. But anyway,
let's get my.
this one had 2 problems really. One was what I talked about. The other was you see that blue line. That's a AMT balance area high. So it was
Here.
going to hit a problem area before 2R.
Oh, yeah. Okay. Yeah, right there. Okay. So okay. So this presents a very interesting phenomenon. So a couple of choices that we have are, one, do we need to be taking lower risk trades for so that your R can be preserved, but so you don't need as much range. So larger size, for example. If you take larger size for lower range, get the same R.
Yeah, you could do that in products like bonds and ES. In crude, it that doesn't work.
Yeah. Yeah.
That does it's so thin that yeah, I mean yeah. I've been the full print many times at certain prices in bond and crude, which is not good. That is not a comforting feeling.
Yeah.
So you don't want to be doing that. And so to be stacking on size, I want to spread it over range and yeah. So to tighten that up and do more quantities, not realistic for me in here.
Is this a 1 minute chart?
No, it's about I don't know. It's definitely not a 1 minute chart. It's a ticker trade chart depending on
Oh, it's
what
a tick
platform you
trade.
use.
Yeah. Okay. So like
I don't have my platform. I closed everything so that I wouldn't be looking at stuff while you and I were talking.
So it's just volume bars, or not volume bars, but
yeah, it's a tick chart.
tick chart.
I think it's a 600, but it could be more than that. I just can't remember. So it's not time based.
Okay, it's not time based. All right. Well, the reason I'm asking this is what I think one of the dilemmas that I think is. Give me a chance to get this all out, and probably need your help to get it all out, because I know what I'm trying to say, but I may lack the vocabulary to say it clearly. Because I don't want to just say what I think it is in the way that I would do it, because you're not me, I'm not you, and you don't have to think the way that I think. But I think this idea might be worth considering. With the number of variables involved with taking this trade, apart from it being a qualified setup. So let's just talk about that for a second. We have a qualified set. That's not a helpful color.
No, we don't because of the delta. So,
well, okay.
That was the whole point. Is I sent it over and said, "Hey, here's a QM. I'm not taking it because."
Well, let's go back. Let's go back, because I 3 of the 4 need to be, well, that's the ASO. So let's see. Requires an obvious high-low net delta on prior higher low structure. Oh, okay, I see. So the high doesn't have a high in delta. So you're not getting a blow off, is what you're saying. You called it that, but that's fine. So
Yeah,
the
yeah. I mean,
highs need to match.
yeah. If what I saw on those first two arrows happened in the head and the left shoulder, let's call it, I would have been in this trade. No doubt about it.
Okay. So then the problem becomes in the garbage trades, are you not trusting this or you're not trusting this? Or you're flip-flopping?
In the garbage trades, I may carve out another section in that where you have your arrow in that let's pseudo right shoulder and find weasel another way in just to get something on, let's say.
Okay. So I want to back up. So it sounds like you know that it doesn't meet the criteria when you said that.
Oh yeah, yeah,
Okay.
yeah. But the
Okay.
crazy thing is,
I wasn't hearing
it's
that
as if
before.
it's as if it's as if I didn't even realize I had criteria until about 10 seconds after I'm in the trade. And I'm like, oh fuck, what? No, this is
Okay.
not. This is not
Okay.
a qualified trade.
So
May as
okay.
well manage it. I'm in it.
Do you see
So,
something in here that historically would have gotten you into that would have weaseled you into a bad trade?
uh, well, unfortunately, this one works out great. So it's
That
it's
doesn't
kind of hard,
matter.
hard to sit here.
It's still a garbage trade according to your criteria. So do you see anything in here that triggers your mind that says, "Yeah, I've just seen that do that so many times. That's why I took it."
If if one of these made more of a failed swing up, so it pushed above kind of the top of your yellow box.
Or even like this above that one right there.
I'd like to see it take out all three of those, and then so a true failure.
So
I'd like to
failed
see.
swing is a real failed swing.
Yeah,
Yeah.
yeah. I mean, the faster the better, but sure, pushes up, and if it had some nice, let's say net long delta in it, then then I might just have to short that.
Okay. All right. And what are you thinking when you see that? The impulse, if you have words in your head, something like this is going to work out quickly, or those suckers, they didn't know that this is about to fail and I got them. Like, just tell me you, and I'm trying to be transparent, but whatever you feel like you
Yeah,
could
I don't
share.
know. That's the thing is it's not a much of a premeditated thing. It's more of, all right, I've missed the main entry. Now can this would still be valid entering into this
Mm-hmm.
because it would be between kind of the mid of that left shoulder and the head. So it's this is a kind of a poor example. I mean, it'd have to be something towards the bottom of this box or in the middle of this box to truly not be valid. Now, again, it didn't have the delta in the left structure anyway, so this whole thing's not valid. But for what we're talking about, I mean, it's just uh, the perplexing thing to me is I just find myself in a trade that wasn't qualified, and
Mm-hmm.
it's like, really. Yeah, I mean,
Well,
it is it's surprising almost every time it happens.
well, and I'm, I mean, I think I know that it's there, but I'm still having trouble getting it out of you. Is that you're seeing something? Your brain is getting an input, and I'm just having trouble getting it out of you about what the input actually is. So maybe this is not a good example. So do you have any examples of a garbage trade screenshots we could look at?
Not easily. Like I said, I had everything shut down.
Okay.
Let's I don't think I took any pictures or captures. I'm trying to find something.
And then I between this and one other thing that I want to say, I have basically a prescription I want you to try. Something I want you to try because I think what you're saying is if I can get rid of the garbage trades, that my equity trades are going to be fine. I'm doing all right. Tell me if I'm wrong about that.
Uh, I think so. That wasn't bad. Just trying to find something I may have set off. That was true garbage.
Hmm. Doesn't it always do what you don't want it to do when the setup isn't right?
I mean, here's a sim that because I was done, and I don't really execute in Q unless we have ultra low volatility in what do you call it, NES. So I will still plot.
All right, let me pull that up. All right, perfect. Talk me through it.
All right, so this is a hybrid. This is both a QM and an AMT trade. So there's an AMT level that it's resting on for this entry.
Mm-hmm.
Um, and but the QM itself it has a problem. It doesn't have the structure in the head that it really needs. It doesn't have any obvious net negative delta really in the head of this thing. So the bottom of the if we can call it the bottom of the apex.
Here?
So just below, yeah, there you go. So it's got some, but it's not obvious. And the left shoulder has some. You see how obvious the one on the left just no, that's not it. It's no.
Oh, here?
Yep, there you go.
Oh, I
See how obvious
see.
that is?
Sort of an explosive
Yep.
down bar.
Yeah.
Yeah.
Yeah. Yeah. So those, yeah. Um, so if I was just looking at it that way, you know, then this one shouldn't have been taken. If I was looking at it from an A&T's perspective, and this is, kind of the games you play. I was doing this on Sim, so it didn't really matter, but it could be a game that I played to get into a trade. Well, not really a market that I'm looking at all the time, but missed something in the ES, so this looks valid from two perspectives. It's not quite meeting the QM perspective, but it does have the AMT level here.
And
Let's give this
and
a shot.
your idea is that it's valid, or I'm feeling inclined to take it here, and it looks like up here as well, because it's already
No,
supported this level, or is
no.
that a
So there's a
short?
level. The level it's resting on that is my average that you can see right there.
Okay, so
And
I'm. Is this a long or a short? I'm sorry to not know that.
it's a long. It's a
Yeah,
long. So
that's what I thought it was.
this is an inverse QM. Then that's a limit order that I drug out of the way. I was
Okay.
done with it. So I've got 6 on them. I'm fine here. So it's not that's an unfilled order that can just go away. But I'm filled right in essentially the mid of that left shoulder. It's inverted.
Yep. Yep. Right there.
And I'm filled right at an AMT level. So it's valid from the AMT perspective. It's not valid from the QM perspective because of the delta. And and again, this was not a live trade. This is just something I'm just, but and it's not a market it's not a primary market for me. Yes, I watch it. Yes, I'll trade it if the ES, has if all of a sudden we get into 15-point ranges in the ES, then that's pretty difficult to pull out the type of moves that I need for the type of stop size that we're using.
I think I have a couple observations I want to share with you. One
Okay.
is I think the delta is a more in your mind when you're looking at this is a more of a primary is a primary prioritization, or more so than the structure, because and I say that because when you see the structure, the delta can invalidate it. And what that does is that through permutations means that you're getting how that affects you is that through permutations you're seeing more Head and Shoulders iterations than you are seeing the Head and Shoulders plus the delta iterations, which I think is creating a desire to interact, which is causing you to modify or chase or be involved or click or do something, get a return on the investment of watching screens. That's the first thing that I'm observing. The second thing that I'm observing is the pure number of inputs that you're putting into your mind in terms of the number of markets you're walking, I don't think that's a problem. But where I think it can be a problem is the ability to anticipate where your setup is going to occur and then shutting off every other chart so that you can directly focus on the only inputs that you need to focus on for the Quasimodo or the AMT setup. And then the last thing, and this is very subtle and nuanced, what I'm about to say, is I think the level of ambiguity between, let's say that this pivot goes in and you start to see a retracement because you've got an obvious pivot, and we could define that, but for sake of argument, let's say that we both agree on what a pivot is and it's obvious and it just happened right here. So the level of ambiguity between here and here is high. So what that means to me, take it or leave it, you got ambiguity in terms of iteration and frequency between this indicator and this setup, this price structure indicator or level. Those two things create too many permutations for you to pin down what's a legitimate trade or how well I should manage it or how I should trade against it for bias, because you're not taking every single one and it's not super clear why you should not take every single one. There's too much ambiguity there. And then where I think the major dilemma is, that's a small one because your profitability shows that it's a small one. But where I think your major one is that you do not have clear execution criteria in this area. Why I think that's important is I've surmised, but you haven't told me, that the failure rate changes over time for you in this area. So if we see this and then maybe like that and then right back up, this in your mind is probably all still valid if I were to guess. This is like a trade that if you was a bad one, you'd be hoping it was going to work out.
I would be managing it. So,
right.
We all hope that all trades work out, but it doesn't really help us.
Yeah.
So.
Well, my goal is to eliminate as much ambiguity as possible. So how accurate, how close am I in my observations to what's going on for you?
I think I agree with it. I watch too much shit. No doubt about that. I don't think I agree with that you were saying that my definition for entry, where I enter, is all that defined. It is. I mean, this is about as ideal entry as it gets. It's right in the middle of that structure that I like to enter in.
Mm-hmm.
And then it had the other factor of being at a level that it's resting on as well. But from a just pure QM, that's why I pulled this one up. So and I also agree with the split focus is not doing me any favors. It's almost as if I watch so much stuff that then I miss something, and then I'll start looking for marginal setups elsewhere or taking marginal setups elsewhere.
It's a square peg in a round hole issue. I don't think there's anything wrong with working and looking multiple products, but the willingness to be rigorous about what the setup needs to be. I mean, the thing about a head and shoulders setup and the thing about a location trade is that there's absolutely nothing to do until until it occurs. Until this starts retracing, there's nothing for you to do. Especially if the delta, even if the delta is not right, there's nothing to do. And right. If you're watching a low, you're watching for delta, and if delta, then you should turn it off. As soon as the delta is not right, you turn it off, and that market's done for you. As an example, if you want to continue to press taking this, I know you may not agree. I'm being a little bold here, but if you want to continue trying to assemble two ambiguous pieces of information, something has got to give, and it's going to be you. It's not going to be the market. It's not going to be your system. It's going to be you. So my view is, what variables can we eliminate to get rid of the garbage trades? I have a couple of ideas. So the first idea is eliminate the multi-trade setup. It's either a QM or it's an AMT. It's not both. They don't work together. They're not friends. They're not communicating.
Now this has happened to me. I mean, they're listed separately on my plan, and you only got a little bit of my plan, by the way.
Yeah, I'm sure well, you've been doing it for a long time. I mean,
there's other trades.
Yeah. So what my thought is that if you're going to take a structured trade, then that is, in my mind, here's a couple of things. Let me try and start writing this down. I want to slow down because sometimes I can just go off the top of my mind and it's really good, but then I forget it. And well, I guess it's recorded. But first thing is the Quasimodo trades probably should be better suited to structured products. So what does that mean? Yeah, I mean, does it work fast and great on on CL? Sure it does. But is it better on ES? More than likely. More than likely, that's a structured product. It just is going to respond to its internal price structure, and the rate at which it moves is so easy to anticipate. It's not about desiring the outcome; it's about eliminating ambiguity, so that you're at your best.
So my win rate is actually better on things like GC, CL.
Yeah, because it moves faster.
I don't.
Your identification is better, and my guess is, and this is my observation of many traders, is like they're either good at execution or they're good at trade management. Usually, they're not good at both. I think you're good at management. It sounds to me like you're good at management. Everything you told me about risk, I'm managing the product. You didn't. I even asked you I pressed you to see if you'd use the word hope. You didn't. Most people would buckle and say, if they were hoping, they would buckle and say, yeah, I'm kind of hoping it's going to work out. You didn't. In my mind, you're good at managing trades. So what that means to me is you've got to help yourself as much as possible, eliminate the variables that prevent your weakness from taking over, which is execution. There's too many variables. So the next step in my mind would be eliminate if it's a product that I think either a day or a product. It doesn't really matter. But if it's a day or a product or a location that I think is better suited to AMT, I'm going whole hog on AMT. I'm not looking for, if a Quasimodo shows up, I'm not taking it. I don't care. I'm only focused on AMT because of the composite structure that's here, and that's what I'm going to focus on. I'm only focusing on this setup for this trade today. If it shows up first, everything else gets turned off. And as soon as my delta read is done, that gets turned off. I'm not looking at it. It's over. Does that make sense?
It does. Here is the chain reaction that has. It decreases my frequency of occurrence of trades. Mm-hmm. And given my low risk of each trade, mm-hmm. I need a fairly high frequency of occurrence to produce an equity curve that I want.
I see.
And so I don't really like to up risk because I'm now decreasing my number of trades.
Yeah, you're comfortable with less size than you are with less trades. That's okay.
Yeah,
I don't think that's a problem. Yeah, the question is, will you babysit this trade? Or can you set it and forget it?
Say that again?
The question is that do you need to babysit this trade, or do we need to build a sequence that says once the trade is so much % on side, I minimize my risk, and then it's okay if it's target or stop?
It gets to that point. I have criteria that is laid out for if I'm only looking at, let's say it's, and this one actually, I think it did. Well, here, I've got the outcome here. There you go. Where is this? And the only reason I just, so you can see how this was managed. Mm-hmm. What was the question? Oh, set and forget. Okay.
Set and forget.
No, these generally have to be managed for the first half of them, essentially. There is, once it gets to a certain evolving R, as people like to say, it the stop needs to come up as it did here.
Okay, let me download this one because this is ideal, right? This one's ideal.
I didn't hit target. I mean, it didn't even hit the full
But I
target for
mean,
the
from a
QM.
management standpoint, this is an ideal.
Not bad. Not bad.
All right. Let me pull that up. Because there's basically one of the dilemmas we always face in trading is that there's either an offset or there's a mitigation in how every choice that we make, and it changes the outcome of everything we do. If I move my stop up too fast and I get stopped out, I ruin my R. So how do I avoid that without changing my trade frequency? Every decision impacts the downline decisions, and that's the thing we have to be prepared for. So this is the okay. This is that same trade. Basically, but the finished result.
So you can see how much initial risk was at, I'll call it 550. So initial risk had moved up all the way to 620 or so, whatever that is, 615 for the final stop out there.
Okay, let's help me because I don't know, and I am so abysmally bad at math. It makes me wonder why I would ever consider being a trader. Help me understand. What is that risk number? So that's what, 600 down to 555-ish?
Let's just call it 50 points.
50 points. Okay. 50 points. And then you wanted where's your you wanted, well, here's 2R, but where's you want 3 on this one, right?
No, I just don't want something in the way at 3R.
Okay. So you're okay, that makes sense. So here's the question: why was this invalid? Once it took this, like, why did you exit there?
It had a failed swing that I'd moved the stop up to already, and another failed swing that it couldn't hold. And so the next time through is usually it's just done. So I was done there.
So let's just talk about that. So what you're saying is, this is what you're calling the failed swing?
No, where I actually got out just under yeah. So right there's a failed swing for me. There's actually 2 of them.
So did this end up taking that out on the day or no?
No.
So this rolled. I didn't look. I don't if this is today or it looks like this is today.
Actually, I don't know. Actually, this is a little earlier in the day. I was thinking this was later. I don't remember either. Again, this is it. I don't take
1422.
I don't take sim trades, all that. It's not like I'm going to journal a sim trade or something. So no, I mean it's just
no. I get you. I'm not laughing at you. I think it's funny. I agree with you. There's our level. Let's look at your. That's not helpful, is it?
See. No, yeah, that I don't think it ever.
Doesn't look like it got there.
No, it didn't.
1402. Oh, it's a 2-hour trade. Noon. Holy cow.
Yeah.
Yeah.
All
right. Yeah, it didn't get there. It took a long while so it came down, it took you out, and it rolled back up, and then it rolled back down. So, okay. But still, that's probably 1R in that range when it took out the swing. That's probably 1R recovered, lost because we took it out basically at that level. We could dig into that. Not really super important, but I guess my point is that all we really need to do for you to be in compliance with your plan, I suppose, is that you need 2 swings that breaks a high, and then you can pull up as soon as you can pull it up to there, that trade's done being managed. Correct?
Not about the swing count. It's almost always about the R, and I'm looking at the failed swings to find reasonable stop placement to manage that R.
So, I mean, basically with that criteria though, then you're just saying I have to babysit a trade. I can't do anything other.
That is part of the job.
Yeah. Well, not for everybody. Some people it's set and forget, and that works just as good.
Yeah.
So what that means though, okay. I wonder if you just saw that.
I don't think that I mean, it doesn't bother me to sit in trades
Oh,
in
it's not about
Wednesday.
bother. It's not about bother, but I'm talking about competing priorities. So you need a trade frequency count. I'm a believer that the internal logic that you're executing is causing the dilemma. It's not you're not crazy. You're not demon possessed. It's not that. It's that you have an internal logic. One of the things that you've laid out to me is that you need to keep your trade criteria up because your risk is low. Otherwise, it's really just not financially worth it to trade. You basically said that. But then you also said, I have to babysit trades, and I'm not babysitting them for a structural change. I'm babysitting them for an R factor, and I'm basically watching structural changes at R factors. So what have you said? You said, I've committed my eyeballs to these screens, and I'm putting everything on it working out favorably for me. So now that's fine. There's nothing wrong with that. Talk about when it's not happening, missed trades. So now I know how long I have to sit and manage a trade. I know I have to babysit. How much harder are you going to work to get in one? Because if you know all the work that it is to actually extract the R at your current frequency count, it's hard. It's gonna be hard as hell. So it's no wonder why you'd be trying to crowbar a bad trade into your distribution of trades because you need a higher frequency.
Well, I just don't want to filter anything out. I don't want to eliminate trades, I guess, any further. Was my concern because
Mm-hmm.
I want to have ideally, so kind of ideally would be 2 to 5 trades a day. Now, whether that happens or not, it can be 0, it can be 15, just depending on the day. But that's where I want to be.
Mm-hmm. Well, my question is, so basically what I'm trying to get us to an action plan here so that we can test some stuff. But ideally, let's replay this trade. Let's say we take it again and we say, is 50 points. As soon as it breaks a swing, I'm going to make up some criteria, but you can change it. I just want you to pick specific criteria. But for example, let's say we take this trade, it meets the criteria. Let's say it does meet the criteria. And I'm not going to move my stop until it breaks a swing. And as soon as it breaks a swing, I move my stop to break even. As soon as the swing that's broke so we don't lose that. We move the stop here. And then we move the stop there. And then we move on. We don't do anything else. So what we've done by doing that is released you to go look for more trades. So now what I'm asking you to do, follow this. I'm saying either focus on this setup or this setup. Step number 1. Step number 2 is manage your trades in a fixed manner. So we're looking at 10 markets. We've selected one where the QM is going to set up. There it is, it's set up. I turned everything off. I'm only focused on that. I take that trade. I get in it, and I have my 2 management points, and then I set and forget. Bookmark that for a second. Then I open my charts back up and I repeat the process and I find another trade. Okay. Now, in the midst of this time period on the other trade, in the midst of this time period here, while it's playing out this same sequence, what I want you to do is be able to peek back and repeat it. So if a high takes out another high, and then that high you just repeat it and you keep moving it up like that. And in this way, you're not adding any complexity to the trading. You're not adding any variables to the execution. You're managing it better, and you're refining your focus on how to execute a specific setup with the minimum amount of variables possible, and to take away your garbage trading. What do you think?
I have to think about it. I don't have an immediate answer. I'd have to kind of take a look at things and understand what goes on here.
Okay, I'll write it up, but I really think that that's the plan. If you're able to sequence, start eliminating variables so that you can sequence what essentially what perfect looks like in this scenario, and you practice, you get 10, 15, 20 of those, especially moving between products without any errors, without any garbage trades, I think you're going to start getting comfortable with a management scheme. And maybe it's not exactly the prescription. It probably won't be the exact prescription I just gave you, but it'll be a prescription that you will follow.
Okay. Yeah. I mean, like I said, I always like getting some different perspectives. So I'll take a look.
Well, I hope this was helpful to you.
I it's always helpful to discuss things with people that are, I don't want to say poking holes in it, but that can, well, essentially help you poke holes in it. So
Yeah, I mean, I like to get us to an action plan, but to me, apart from what a written one, I usually like to have it like written out like this. It just took us quite a while to get to.
Yeah, no, I just saw the time. I'll let you go. Let's wrap it up here since we're way over. I didn't realize how long we've been on here.
Well, that's okay though. Like I purposely chose that. Like I said, I want you to get some meat out of it and have something to work on. And then what I'd love for you to do, if you're willing to do it, is once you decide what your plan is going to be. If you decide you're just going to ditch everything I said, that's fine. No big deal. But if you decide to act on any of the advice, what I'd like to see is, like, if you could devote that to a couple of bullet points. You can be as verbose as you want, and I'll read whatever you put together. I love detail, but it doesn't have to be. And then I'd love to see progress. If you could just ping me and just say, look, I tried it. You're right. That worked. Or you're an idiot. That didn't work, but I did find this. And thanks for getting me to question my thought process. Something like that. That would be helpful. I'm invested in you, and I like to see you see the results that you're looking for.
Okay. All right.
All right, man. Well, cool.
Sounds good.
I appreciate you taking the time. For the better part of it, it looks like you've got a great. It looks like you've got a great plan. There are things we can talk about over the time, things that might benefit you about moving to time charts or anything like that, and looking for specific market criteria that might help you. But I think you've got a great plan. And the biggest thing is just, I think you're just overloaded with information, and that's the main dilemma.
Yeah, I'm having a hard time with that one. I unfortunately agree, and it's picking, what, and I don't like to sacrifice anything is the problem.
We all think we're going to miss something. We all think we're going to miss something, but the question is, what feels better, the fear of missing something or the pure exhilaration of being in a great trade?
It's just not that exhilarating. You do it a few thousand times. I mean, it's just not. It's trading done well is about as exciting as hanging out in an accountant's office. So.
Yeah. I mean, you've got years on me, so I'm not going to say that you're wrong about that. But when I compare the two scenarios of me choosing fear over the joy or pleasure of being right and having the validation of the plan paying off or whatever,
Yeah. No, that's enjoyable. Yeah.
Everybody likes to be right.
Absolutely. No question about it. And it takes that's one of the problems, I would say, or one of the stumbling factor pieces of how people in market profile just don't realize kind of the low expectancy, or not the low expectancy. It has a decent EV, but it has super low win rate for most people.
Yeah, no, so, I found that exactly myself. You see the replays and you hear the examples, and it's like, yeah, it just bounced off of this, just 10 ticks of risk, and look, and it was a 600 tick trade, and I'm like, yeah, I didn't see anything anywhere near that. And so then when you finally got into a good trade, what do? You overmanage it because, you're sick of you've lost 6 times in a row. So
yeah, that can happen. It takes you have to get sensitized to it for sure, because that can happen way too easily. The overmanagement.
Yep.
At the same time, I know I'm in contact with a couple of guys that scalp for a single ES point.
I've heard there are animals out there like that.
92% win rate.
Well, yeah, I
But
mean, I can believe that. I mean, but what are they? What kind of size are they running with when they're doing that? I mean, it's got to be hundreds of contracts.
up to 400 lots.
Yeah, yeah, it's got to be big.
And he doesn't even consider his risk. He bases it on the size of the entry bar. I'm like, what? You don't scale up and down based on your risk? He's like, no, never even thought about it. I'm like, what?
Well,
It's just so it's so butt bonkers to me. And I mean, he's wildly successful. It just
yeah,
doesn't matter because the high win rate alleviates almost all issues.
yeah,
Now he can have two losses in a row, and it can pretty much erase his week in a half a month even in a high volatility environment. But
yeah.
that's just part of it.
That's part of it. That's always a
I
trade-off.
tried it. I can do it.
Yeah, the most recent thing in terms of sharing stories, the most recent thing that I've been working on is a 5-point challenge, and just trying to extract 5-point runs based on structural moves. And I haven't been tracking the win rate, but I can tell you, um, one of the things that I'm working on in my trading is that I'm perfectly content to wait for a structural setup, or like call out a long-term swing, or getting 60% of the range or something like that in the day. But one of the dilemmas that I face is that if I miss a trade, so similar to you, if I miss a trade, I'm more likely to press something that isn't, or I'll take the other side. I'll be like, okay, well, it's got to turn around at some point, or something like that. And all of that is, I know the process dilemmas and the ways in which I'm managing that. But what I have found is the 5-point challenge is relieving the tension. I have a way to extract equity from the market with another strategy that's a different risk model, a different win rate, and requires less time to wait. So what I'm starting to say is, this is kind of an interesting idea. What if you're snacking on the market while you're waiting to eat your feast?
Yeah, and I think that I do some of that with some of the other trade styles that I have as well.
Yep. And the only thing, maybe one more point on yours is that
I just
maybe,
pulled up the first two that were kind of easily available, so,
oh, did you, did you,
and
did you
and
post
kind
them?
of easy to define.
Oh, I see. I see what you're saying. Yeah, yeah, yeah. Yeah, and I think maybe there may be some clarity there, that if the garbage trade is your example, is if it's typically the Quasimodo. You didn't say that it was, but maybe your garbage trade, is it a feast trade or is it a snack trade? And I've done that. I've seen that before many times, where it was supposed to be a scalp, and then I ruined the day because I took 30 scalps in areas where I was supposed to be feasting. So I was only really supposed to take one or two.
Yeah.
And that happens all the time. So
Yeah.
you mix strategies because you're taking a particular skill set and a view and a bias that is meant for a particular execution strategy, and then just blending it sort of incidentally.
Yeah. 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 There's unfortunately there's about 10,000 ways to do it wrong.
Well, I hope I'm
And
not saying something so generic as that, but yeah.
no, I mean, but it seems like once you've eliminated almost all of them, you come up with a new way to do it wrong.
Yeah, yeah. That's that. Well, yeah, that's funny. That's a whole other topic. Okay, well, it's been great
Yeah.
spending time with you. If you want to follow up, if you want to do another session, if you want to provide me feedback, I mean, that's be one thing that I'm looking for,
All right.
to do these kinds of workshops. And so, love to hear from you, and certainly want to hear about your progress coming out of this.
Very good.
Okay.
I appreciate it.
All right. Thank you, sir.
Have a good one.
You too. Bye bye.
Thanks. Bye.